This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened.
And I'm Haidi. Stroud-Watts. The top stories this hour. Asian stocks to fall after a volatile session on Wall Street, even as President Trump downplays risks of a recession. Investors getting increasingly unnerved by whipsawing tariff policy.
Trump also dials back his threat to double duties on Canadian steel and aluminium to 50%, but says Australia will not be granted an exception from tariffs.
And Ukraine accepts a temporary US-brokered ceasefire plan in return for military aid and intelligence.
Okay, got some breaking news out of South Korea. It is jobs numbers for the month of February, and it's a big surprise beat here. Actually, the unemployment rate contracting to 2.7%. That is a reduction on the 2.9% we saw in January, and a lot less than analysts were expecting. There was an expectation we'd see a modest uptick to 3%, but no, the jobs picture improving in South Korea. We did see the government deliver a front-loaded job support package in the first half. About 70% of that package was delivered early. That may be propping up the market here. There was also a rate cut from the Bank of Korea in February as well, down to 2.75%. But there you see the won, not trading yet, but 14.53.70 there. But we'll keep an eye on that as things get underway. That unemployment rate, just to recap for you, 2.7%, much better than expected, Heidi.
Yeah, perhaps that could give a little bit of a lift in what is otherwise, Paul, expected to be a pretty difficult session when it comes to how we're getting started here in Asia. But take a look at US futures at the moment. We are seeing S&P futures up by just about 0.25%. It was a truly volatile trading day. We saw the S&P 500 briefly falling 10%, then that late rally pairing the drop to just about 0.5%. So really the headline came sort of mid-session with the S&P 500 almost entering correction territory, falling that 10%, but then managing to recoup that by the end of the trading. But it does look like that risk, of course, of a correction still plays out potentially for the following sessions that we get this week. The momentum at the moment is a real problem when it comes to US trading. Nasdaq 100 futures also looking a little bit more peppy this morning. And take a look at treasuries, as we did still see some of that haven demand, particularly going into precious metals, including gold, continuing to see that climb above $2,900 an ounce there on that safety trade. Taking a look at oil, crude also staging a bit of a recovery, but of course we have seen many weeks and months now of just a steady decline when it comes to that 6-month low for oil. Metrics are starting to signal perhaps a sell-off was overdone, but clearly a lot of concern both in terms of US tariff policy as well as demand from major markets like China. Let's take a look at how we're setting up in that case when it comes to the open here in Asia, and it is looking a little bit mixed. We're seeing Australia coming online off by about 0.5%. Of course, the headline here, unsurprising as it may be, but President Trump ruling out steel and aluminium tariff exemptions for Australia. There had been a lobbying campaign, if you will, to try and secure that exemption. Previously, Trump had said that he would consider some sort of carve-out for Australia, but that exemption will not be granted to the Albanese government. It is seen as a bit of a blow to these long-time allies in that relationship, but largely perhaps not unexpected for those that have been watching these developments. We're seeing Chicago Nikkei futures looking pretty positive, actually, in dollar yen, still at that 147 handle. 145 is that level that we're watching at the moment. We're also watching geopolitics at the moment as well.
Yeah, Ukraine accepting a US proposal for a 30-day truce with Russia as part of a deal to lift the freeze on military aid and intelligence. US President Donald Trump says he hopes that Putin will also agree to the proposal.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
All right, for more, let's bring in Bloomberg's Michael Heath. So, Michael, do we know what Ukraine's agreed to exactly here in terms of any potential concessions, minerals deals, security guarantees, that sort of thing?
Yeah, well, look, Paul, I mean, at this stage, it isn't terribly clear because we're talking about this initial ceasefire. But the ceasefire, as I understand it, would involve, the ending of bombardments, of missile strikes, drone strikes, and these sorts of things. Ukraine had sort of agreed to that minerals deal already, so presumably that has been reinforced. And Then they've talked about the sort of parameters that Ukraine might be prepared to accept when it comes to peace. The question, though, of course, I mean, and it's great news that they are on board. I don't think they had much choice here. I think that after the Oval Office blow up and the pressure put onto Ukraine and Zelensky by President Zelensky by the White House, it had no room for manoeuvre here. It had to sort of put the onus back on Russia to make its decision on whether it would join this. So it's going to be fascinating to see what sort of comes out of that, because President Trump's envoy will go to Moscow, and then there's potential talk of a summit with President Trump down the track between Putin and Trump. So yeah, we'll just have to sort of see how that unfolds. But Ukraine sort of was backed into a corner, and I think they probably just did the best that they could here.
It's a really interesting piece in The Atlantic by John Bolton, right, talking about, what is it that drives Trump's foreign policy, and the question that he comes up back to is, how does it benefit him? Is that why we're seeing sort of so much volatility and sort of episodic changes when it comes to these policies? And does that kind of mean that we don't really know what the outcome is going to be, particularly if we also now have Russia having to come in?
Yeah, well, I mean, it's a reasonable point. Obviously, Bolton worked for Trump in the first term, so he's got a reasonable handle on him. And it does seem to be that that Trump's whims do become policy, and he obviously has a team around him now that's really ready to respond to whatever those particular whims are. So this is where it's going to get really interesting. President Trump seems to have this fascination with President Putin. Even when there was that blow up in the Oval Office, Trump was saying how what he and Putin have been through together, when there was all those accusations of Russian interference in the 2016 election to help get Trump elected, which there turned out not to be much to, but these sorts of things which really are not terribly relevant in the situation. But if Russia plays a hard line here and chooses not to engage in this, it will require Trump to sort of respond. I mean, he's put a lot of sort of emphasis on securing a ceasefire there, so it'll be interesting to see what he does. I mean, Putin is reasonably smart. There's every chance that Russia, does agree, but then hostilities break out on the ground, or someone fires and it all falls apart. Because Russia's attitude seems to be, certainly from Bloomberg's reporting of it, that everything is moving its way now, and it may as well just maintain its sort of maximalist demands here. So whether they go for the ceasefire is going to be fascinating to watch.
Mm-hmm. Bloomberg's Michael Heath there with the latest. And the White House says a 25% levies on steel and aluminium will go into effect midnight on March 12th US time. That's as Trump backed off a threat to impose 50% tariffs on Canadian metals. Bloomberg's chief North Asia correspondent Stephen Angle is with us for more. And Steve, not a lot of this is unexpected, right, other than, of course, the back and forth that we saw when it comes to Canada.
Yeah, it was a roller coaster day, obviously, with Donald Trump. And by the way, the White House is announcing that those steel and aluminum tariffs, no exceptions, do go into place in less than 5 hours from now, midnight, March 12th in the United States. But there was a roller coaster, obviously, that saw Donald Trump in the last few hours, of course, threaten to double the duties, particularly on Canadian steel and aluminum, from 25% to 50%. This after the Ontario Premier, Doug Ford, essentially said he was going to place a surcharge on electricity that they sell to the United States, including New York State, only to retreat back to plans for the previously announced 25%. This after Ontario kind of backed down as well. So it was definitely a roller coaster ride on policy, as well as the market saw that roller coaster ride with, by the end of the close, obviously, as you've been mentioning, the S&P 500 did close slightly lower, bringing its losses this week down to 3.5% lower, but still, it could have been much worse. We're also hearing that Ontario Premier Doug Ford will be meeting with U.S. Commerce Secretary Howard Lutnick on Thursday in Washington, D.C. Maybe they can patch some of those differences. But again, that big R word is still looming out there. Is the United States potentially heading for a recession? Donald Trump didn't necessarily say it was going to be a recession, but he did allude on Sunday that there could be some economic pain. He kind of walked back on that sentiment as well today in Washington, D.C., saying, I don't see it at all when talking about a recession. I think this country is going to boom. As for the market sell-off, which has been very poignant for many market participants, they're going to go up, they're going to go down, Donald Trump said. It doesn't concern me. Well, it does concern a lot of people, so we'll still be focusing on this. Meanwhile, China is watching this with great curiosity.
Yeah, let's talk a little bit more about China, Steve, because lost in all the noise, of course, the US is trying to iron out trade issues with China as well. Are they any less chaotic and confusing?
Well, China's been very measured in its approach. Yes, there was some more hyperbole that came out of the National People's Congress, in particular with Wang Yi, the foreign minister. He is known to be outspoken. He called Donald Trump's 20% tariffs on the fentanyl issue on China to be two-faced policy. So he's been quite sharp in his rhetoric. But so far, China's been sort of sitting back, waiting. They've been only slapped 20% tariffs, all because of the fentanyl issue. We haven't even gotten to the nuts and bolts of the trade imbalance, which, of course, in the first couple of months rose to a record trade surplus for China of $1.71 billion. So there are trade issues in addition to the fentanyl issue that must be resolved or left to fester, obviously, as tariffs go up. So China was fairly measured through the MPC. They're obviously raising their budget deficit ratio to 4%. They're going to flood this economy with more stimulus and try and boost domestic demand. AI has been all over the newspapers all this week. It's been all over the lips of policymakers this week. They're seeing opportunities there as the bifurcation potentially between China and the United States deepens. But again, we'll have to see if there's ever going to be some higher level negotiations between China and the United States. Right now, the complaint from some is that these mediation talks, if you want to call them that, have been essentially bogged down in lower level working groups.
All right, Bloomberg's Chief North Asia correspondent Stephen Engel there. We have more ahead on the Asia trade. This is Bloomberg.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
President Trump there on the risk of a US recession. Well, our next guest sees the end of US exceptionalism after a decade in these markets. Pooja Malik is a partner at Nipun Capital and she joins us now. Pooja, really great to have you with us. Are you convinced by the narrative that President Trump is putting forward in terms of what's going on with the US economy and the way that the markets are reacting?
He talked about no recession in the US, and I think whether we have a recession or not, we're definitely headed for a slowdown. We're seeing that already with Q1 corporate earnings being revised down across all the sectors, right? And so, as you've probably seen, GDP growth estimates for this year in the US have come down from over 2% to now in the 1.6, 1.7% range. And if you think about it, GDP is driven by three key groups, right? Corporates, retail, and government. Corporates are hesitant to invest given the uncertainty with tariffs, with pricing, etc. Retail consumers are slowing down spending, and you're seeing that in US corporate earnings when you see companies like United or Dick's Sporting Goods or Kohl's report lower earnings. And, the government is on an efficiency spree. So with the Dodge effort, they're cutting back as well. So we see all three categories cutting back on spending and investment, which is likely to lead to downward growth revisions in the US.
In that case, particularly as we've seen such an outperformance gap when it comes to the US versus other markets, including, of course, notably China, but also in Europe as well. Where would you be refocusing when it comes to opportunities? I know emerging markets you think perhaps hasn't gotten enough attention.
That's right. And it's interesting that you bring up China, as did the previous speaker on the program. So there's three key things supporting China. The first is the government stimulus. Both government policy as well as government stimulus is really committed to re-engaging consumer demand and corporates. So you remember a few years ago when the Chinese government had the fallout with tech companies fining them, whether it was Alibaba or Tencent, and they're now re-engaging again with the corporate sector in China. That's a good thing. The second thing we're seeing is the shift away from semiconductors to application and services companies that are benefiting from the AI trend. So instead of stocks like TSMC or Samsung, now the new beneficiaries are likely to be companies like Alibaba and Baidu, and you're seeing that in stock prices. So that's supporting China. And then also valuations, right? I mean, China, ex the mega cap tech, is still trading at low single-digit PEs. And so there's a lot of room, I think, for China to get repriced off of this level.
You still have to exercise caution, though, and be pretty selective here because, of course, China still does have domestic challenges, and that's notwithstanding the really unpredictable trade environment at the moment.
Yes, and therefore, to your point about being selective, I think the place to look is China domestic. We're looking at sectors and stocks that are being supported by the government. One sector that stands out for us is Chinese financials, where you can get 3 to 4% dividend yield. They're trading at 7 to 8 times PE or price to forward earnings type multiples. But also, these are stocks that are being backed by the government. The Chinese government sees the national banks as key to the recovery trade, and they're a key part of the markets in China given their market cap. And so stocks that have government support, that are giving you a strong dividend yield and stable cash flows, that's the place to look. And Chinese financials is definitely an area that we're looking at very closely at these levels.
Just in terms of the whole tariff picture, what do you think's worse from your point of view? Actually having tariffs or just endless talk, uncertainty and U-turns around tariffs?
I think the uncertainty is definitely worse because for us as an investor, once we know what tariffs are, where they're going to be levied, how long they're going to be for, we can model that in company earnings, in valuations, and future fundamentals. And I think it's the same for corporates. If corporates know where the tariffs are, they can then build out their capex and investing plans accordingly. But if you can't do that, the uncertainty and the back and forth that we've been seeing on a daily basis just leads to stalemate. So now you're in a situation where people don't want to put capital to work, whether it's corporates or it's investors. And I think that is not a good sign for markets or for the economy.
Pooja, when you take a look at the dynamics that we're seeing when it comes to China at the moment, and I know we've spoken a little bit about, the levels of government support, clearly some of the tariff pressures as well. How much confidence do you have when it comes to the revival of the private sector and tech in particular as a driving narrative to really sustainable gains?
Tech in China is also bifurcated, right? So if you think about tech as being, one is sort of the new age internet technology companies. There we're seeing the revival already. And China is very committed to supporting and growing companies in the AI sphere, right? So I think that's going to continue. The hardware, the semiconductor sector is where we see more threat from tariffs, as well as hardware equipment, right? Networking, things of that kind. Those are areas we're staying away from because we think that's where the tariff situation is really going to be uncertain and tough. So again, it's back to that dispersion within the sector and looking for areas of opportunity within each sector. To recap, I think the hardware tech sector is going to be tougher than the services companies focused on AI. And then last note to add there, I think telecom services is a very interesting place to look, not just in China, but across EM. Because telecom services, again, not hardware equipment, but services, these companies often have an oligopoly in emerging markets. They have licenses from the government, which leads to very stable cash flows. These are domestic stocks. They're not impacted by tariff situations. Many of them are high dividend yielding stocks. So an area that we like really across EM is telecom services. And within that, the Middle East we think is a good place to look also.
All right, Pooja Malik, partner at Nipun Capital, thanks so much for joining us. We have more ahead on the Asia trade. This is Bloomberg.
Former US Treasury Secretary Lawrence Summers thinks there's almost a 50-50 chance of the US tipping into recession this year. He spoke with Bloomberg's David Weston on what investors should look out for.
I think you have to say that there's in the range of, I'd say still slightly below, a 50% chance of a recession starting this year. You know, I've watched economic forecasts for a long time, and one thing I've observed is when they start being revised in a direction, there tends to be momentum. And all the revisions are going one way at this point, which is towards less growth. So I think we've got a real uncertainty problem. I think it's going to be hard to fix that. And we're looking at a slowdown relative to what was forecast almost for sure, and a serious near 50% prospect of recession.
So taking you very literally about that close to 50% chance, for our audience, what numbers should they be looking at to determine what side of that 50% we end up on?
They should be looking at what the slope of the yield curve is and what people are expecting the Federal Reserve to do. The more people are looking for sharp cuts by the Fed, the more they're judging that a recession is likely. They should be looking at what's happening to stocks, and particularly stocks in traditionally cyclical industries. They should be looking at data that points a little bit over the horizon. Data on order books of businesses, data on consumer intentions to buy a car or to buy a house in the next several months as an indicator for judging what is going to happen. All those things taken together, I think, will tell a story. There's also information in what is happening to commodity prices. And I pay a lot of attention to the various compilations that come from investment analysts who are very close to firms, who are reporting which way the firms are revising their own forecasts of future revenue and future earnings.
That's former US Treasury Secretary and paid Bloomberg contributor Lawrence Summers speaking there with Bloomberg's David Weston. All right, so let's take a look at how US futures are trading at the moment. It was another down day for US markets, futures indicating we might see a very modest pop tomorrow. But yeah, the selling not quite as bad as we saw previously. The S&P, though, off 0.75%. Still a lot of uncertainty swirling around the whole trade picture. Steel and aluminium tariffs were doubled on Canada and then swiftly reversed, Heidi. It's getting hard to keep up. It's
getting hard to keep up, and you can see the whiplash really playing out, right? Still, you know, the S&P did fall that 10% from the record, but managed to avoid it at the close, but really, you know, remains at the doorstep of a correction. Like, we could see that happen this week, given how questionable momentum in the US market has been. The VIX remains elevated as well, so we'll be watching for that milestone in the coming trading sessions. This is Bloomberg. Take a look at how we're trading here in Australia in the first half an hour or so of the cash session, and we are seeing a sort of broad downside. We have seen President Trump ruling out steel and aluminium tariff exemptions for Australia. There had been previously some hopes that perhaps carve-outs could be secured after a government lobbying campaign to get that exception. The president had previously said that he would consider that, but that is not going to now be granted. But having said that, we are seeing sort of a mixed picture across the broader picture. BlueScope at one point had been trading higher. They have much more exposure when it comes to steel that's produced in the US, and here in Australia that's exported, and actually they'd previously said that sort of net they would potentially benefit from Trump's tariffs on these metals, more than the detriment being seen. We are seeing now South 32 also turning just mildly positive. Fortescue, the iron ore miner there, off by just about 1%. Of course, that tends to be quite sort of China focused in terms of what drives that price action there. But it is sort of interesting in terms of raising the broader concerns for that trading and broader alliance with the US, between Australia and the US, that is, given that we've also seen the first trade surplus with the US in decades, largely on account of these shipments of gold, as we see that haven play continuing to take precedent in these markets. Let's get you the latest now in terms of the ruling out of the tariff exemption on Australian steel and aluminium imports. There has been quite an effort from Prime Minister Albanese's government, and particularly key, of course, as we're awaiting an imminent announcement on this year's federal election. Let's bring Australia government reporter Ben Westcott. So, Ben, in a lot of respects, this kind of was not unexpected, and as we've been talking about, the actual sort of economic impact seems minimal, I guess you could say, compared to some of the other exports that Australia has. But have we seen kind of the political reaction?
Yes, that's right. We've just literally received some of the first political reaction coming from the Australian government, with Deputy Prime Minister Richard Marles describing this decision as deeply disappointing, which is a strong reaction for a government that has been pretty reluctant to take on the US president or speak particularly negatively about him, given Australia-US ties. But yes, certainly we're starting to see reactions from the Albanese government that they are taking this quite badly, that they have said that this is an act of US self-economic harm, and that they will now be encouraging Australian exporters to look for other markets. Now, at this point, we haven't had any word on, reciprocal tariffs or anything like that, but certainly there is no doubt that the Australian government is viewing this pretty dimly and has said they'll keep fighting for an exemption.
Yeah, Ben, what are the chances of an exemption? Because Australia got a carve-out last time. Australia does run a rare trade surplus with the US. Is there an opportunity here to secure perhaps a trade reversal in our favour?
Yeah, I mean, look, never say never with the Trump administration. Clearly, there can be any number of backflips and reversals just in a given day from the US president. But on this particular issue, there has been no exemptions given from the steel and aluminum tariffs. And clearly, this is a major issue for the Trump administration. They want to see a tough, strong steel sector that is domestically based and reliant in the US. And I think that there is no doubt that this is a particularly sensitive topic for them. In addition to that, there has been a lot of talk from Trump's trade advisors, in particular Peter Navarro, about how Australia, broke its word, according to them, on the aluminum exports last time, and has been, in Navarro's words, killing the US aluminum industry. So I think this is something that we will see a lot of pushback on from the Trump administration. Now, does that mean that it will never happen? Certainly not.
Ben, of course, as Haidi mentioned, we're heading into an election. We don't know exactly when it is yet. It's probably going to be in May. It's interesting that Canada is also heading to an election, and the contest there likely to turn into a rhetorical battle about who can push back hardest on the US. Could we expect to see a similar rhetorical battle here, or is this a very different case?
Australia is very different to the US, to Canada, because down here we haven't got quite so much on the line as Canada does. It's not so much in the daily news about tariff interactions between Australia and the US. I think the most interesting question around the upcoming election is exactly how both major parties want to position themselves relating to Donald Trump. There was a poll put out by Redbridge about a week ago, which found that about 65% of Australians disapproved of Donald Trump, and only about 28% were in favour. So that's a pretty strong anti-Trump message around Australia. But at the same time, about 65% of Australians said that they wanted to see relations with the US maintained. They didn't want to see any downgrading of those ties, really. So that is the line that the Australian politicians have to tread, that Prime Minister Anthony Albanese and Peter Dutton have to walk. They have to be both tough on Trump and show that they're standing up for Australia's interests, while at the same time not doing anything that might lead Australian voters to thinking they're imperiling the US relationship, which is clearly very important to us still.
Well, Ben, you're doing your part. You're pronouncing aluminium incorrectly. Bloomberg's Ben Westcott in Canberra there. All right, let's take a look at how some of these commodities are doing in the meantime. We've got iron ore just hanging on by its fingernails above $100 per tonne. Some of the big iron ore miners here in Australia are feeling the pressure somewhat. Of course, iron a key ingredient in the steelmaking process. Take a look at the oil price as well. It's moving higher. I haven't seen that for a while. The US EIA is now projecting a smaller oversupply than before. Now 500 barrels a day in 2026. That's down from the 1 million barrels predicted last month. So it sees less production from Iran and Venezuela. Copper prices ticking up as well. Well, it's interesting. US copper trading at a premium at the moment. Heidi.
Let's take a look at some of the other stories that we're following this hour, Paul. And House Republicans have passed legislation to keep the US government open past a Saturday shutdown deadline. The bill will likely need the support of at least 8 Democrats in the Senate to become law. If it fails, a shorter-term stopgap may be tried later in the week. If a shutdown occurs on a Saturday, the White House Budget Office would decide which federal workers are furloughed and which essential staff must continue without pay. The world's biggest climate alliance for banks is said to be considering changing a revised strategy for members. A source says the Net Zero Banking Alliance will be handed a proposal that would remove the requirement for members to align their portfolios with a 1.5 degrees Celsius global warming limit. Members would be given the flexibility to adapt their targets to their local markets. A container ship that crashed into an oil tanker near the UK on Monday is now expected to stay afloat after earlier concerns that it could sink. One person is feared to have died in the incident, and the master of the freighter has been detained by local police. Firefighters continue to battle flames on the freighter, with air quality samples showing no toxins. More ahead on the Asia trade. This is Bloomberg. One stock we're watching when Japanese markets open in the next hour is Nissan. The struggling car maker has named Ivan Espinosa as its new CEO, replacing Makoto Ichida, who will step down at the end of March. Espinosa joined Nissan in 2003, currently serving as its chief planning officer. He faces a huge task of reversing the company's fortunes and finding a business partner in the wake of a failed tie-up with Honda. Nissan has stumbled from one crisis to another since the ouster of Carlos Ghosn in 2018.
Well, let's stay with automakers. While Trump's tariffs on cars made in Canada and Mexico have been delayed, car makers in Europe and Asia remain under pressure. Japan, for one, has failed to get an immediate tariff reprieve, while South Korea is yet to start talks with the US. So let's get to Bloomberg New Energy Finance EV analyst in Shanghai, Siyi Mi, for an assessment of this. So, Siyi, can you give us an overall picture of the impact on the industry so far?
Thanks, Paul. So definitely it's a tariff on Mexico and Canada, which currently is still being delayed, that's more hurtful than those on the Chinese imports. Simply because you're looking at the U.S. imports, auto imports from rest of the world, like Mexico, Canada, they accounted for like 42%, which is roughly like 3 million, whereas like China only sent about like 200,000 units of vehicles to U.S. last year. And definitely we're seeing that the impacts on the automakers, and really no major automakers are left unaffected because the high level of integration of the North American auto production system. But some definitely are more exposed, like Volkswagen, Nissan, because like 30 to 40% of the U.S. sales actually sourced from Mexico, which makes them more vulnerable to potential tariff hikes.
What's the impact when it comes to EV adoption this year? Are we likely to see a slowdown as the broader climate changes?
Yeah, absolutely. So the tariff impacts on the EV adoption hasn't really been kind of materialized because only like 9% of the U.S. auto imports are electric vehicles. But being said that, we do see there might be a slowdown in the global market. We still expect the global picture to grow like 30% to this year, and that's mostly driven by some of the emerging market and the big markets like China. But again, like looking at the U.S., we see that just roughly come like around 2 million up moderately. Whereas in Europe, we see there's a rollback in like a fuel economy target, CO2 emission target, and there are potential uncertainties on extended, etc. That could make the market bit slow down as well. Having said that, I think the tariffs also kind of impact some of the auto imports. If the automakers pass those costs to consumers, which kind of drive up the vehicle prices, we do see that will have a negative impact on the EV adoption as well.
Are we expected to see Asia take the helm when it comes to the EV space? And I wonder which operators, right? Because obviously we've seen Tesla struggling for about 6 months now with that almost 50% drop in February. And so much of that has been to the success of BYD. Which, in particular, EV companies in Asia do you think will be reigning supreme in the period to come?
Yeah, so like the U.S. and Europe are sort of witnessing maybe a slowdown this year. We do see some of the Asian countries are doubling down on EV support, not only from like the government side. We see like national governments, state level governments like China, like India, they extended some of the incentive programs to continue stimulate EV demand and production. And also, I think more importantly, as you said, is that the Asian automakers and suppliers, like from China, from South Korea, they're actually stepping up their expansion into the overseas market, which are very important in terms of driving the overall EV adoption because they can bring more affordable EVs to the market. That's exactly what the market is currently needed in order for the EV to come to the next phase of mass adoption.
BNEF EV analyst Siyi Mi there joining us. And another story that we're following, Indian electric scooter maker Ather is said to be moving forward with plans for a Mumbai IPO that could raise about $400 million. Sources say the firm aims to sell shares by the end of this month or early April. They're also saying that Ather is aiming for a pre-money valuation of around $1.2 billion. Bloomberg earlier reported that the firm was initially targeting a valuation of about $2 billion from the IPO, Paul.
Well, meanwhile, Volkswagen said its large factory and employees in the US when deciding to impose additional tariffs on European car makers. CFO Anil Antilt says VW already feels like an American company due to the many investments it has made in the United States. He told Bloomberg that the German automaker seeks to continue growing in the US.
We feel already like an American company. Look, we operate a huge factory in Chattanooga with thousands of people there. Volkswagen Group of America employs more than 20,000 plus people, create safe and well-paid jobs. We invest in South Carolina. So we think these should be taken into account when talking about tariffs and Volkswagen and talking about the US.
But if you were to get 25% tariffs, and I know that it's too early to say, but again, it's not a zero. It's very far from a 0% chance. Would it mean a bigger footprint of manufacturing within the United States for you?
Let's not speculate. And as said before, we want to grow in the US. And we set up some initiatives already, like Scout Project, like more projects to come for brand Volkswagen, and this is what we've been taking off.
And trying to look a little bit further into the future, I know it's sort of hard to determine right now. When do you think you could get, for example, margins back up to, say, 7%? Is that a 2026 project? Is that a 27 project?
Yeah. Now, I've told you some of the initiatives we launched. We launched 30 new projects, 30 new vehicles last year. We will launch 30 new great vehicles this year, and I think you drove yesterday some of these great vehicles. And we are up to a significant positive trajectory towards 2027. It's too early to say. We decided to give you an update on the German AIA.
And then in terms of sort of, because this is something that's very interesting to me as a CFO who's really in charge of allocating capital in a time of radical uncertainty, where is it for you certain to allocate that capital? Where, in terms of, because we have all this unknown about global growth, tariffs, where are you certain that those investments are going to pay off, and where are you putting that money?
Our capital allocation strategy focuses a very clear strategy. Look, we want to keep our market share in Europe. We are the biggest player in Europe, 25% market share. We want to re-engage in competition in China, 2026, 2027 onwards, and we want to grow in the US. And our capital allocation follows these strategic topics, and we have a very clear path behind that.
And then you've lost some market share in China. You've guided towards that about 2%. Are you confident that you will not lose any more market share? Are you now, do you think, stabilized in China for 2025?
the good news about losing market share in China in 2024, it's exactly as predicted and as we discussed that the year before.
Yeah.
So I would say we gave up market share because we tried to find a good compromise between prices and margin on the one hand and volume on the other hand. And you should expect some more market share loss in 2025. And then 2026, I would say second, third quarter 2026, when we have all the technology in place, tech partnerships, autonomous driving, in-car infotainment, LFP battery, then we re-engage in the competition, let's say second half 2026.
You were so accurate in predicting how much market share you would lose last time. Do you know how much you would lose now? Is it another 1%, 2%?
1% is not a bad estimate.
And I'd like to get your sort of a reaction to some of the developments we've had here in Germany. We have not quite a new government, but we have one in the process. When the chief financial officer of Volkswagen wakes up and sees the headlines that the government is looking at reforming the debt brake, pumping potentially up to €1 trillion into the economy, what is your reaction to that? And how do you think it will impact sort of consumer sentiment and the broader economy in Germany?
First and foremost, I'm not in a position to give the German government advice.
No, but you have to adapt to what they do.
Yeah, exactly. If I look at the initiative, for example, for defense and the initiative for infrastructure, I think these are the right initiatives to the right time. But I would sleep much better if they would be accompanied by some structural reform, by also some savings in other areas to finance these projects.
Yeah, go on.
No. Look. I feel a little bit reminded like Volkswagen worked in the past. Look, we always, we had fixed cost problems in the past, and Volkswagen tried to outgrow these fixed cost problems with spending. And from my experience, you have to do your homework on the cost base first, or at least in parallel. Do structural reforms, as we did with Volkswagen, and then you can grow profitable. And this should be the way forward for our economy as well.
Volkswagen CFO Arno Antelit speaking to Bloomberg's Oliver Gook there. Now subscribers can watch us live. They can see our past interviews also on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about. And you can also become part of the conversation by sending us instant messages. You can check it out at TV Go. More ahead on the Asia trade. This is Bloomberg.
We're getting just breaking news crossing the Bloomberg when it comes to Japan PPI numbers there. We're getting that year-on-year number coming in at 4%, bang in line with expectations from economists, and seeing a little bit of a drop down from the 4.2% in January. The month-on-month reading for February there, seeing no growth or no contraction either. Expectations were for a contraction of 0.1%, and the previous reading was a gain of 0.3%. We're seeing no change though when it comes to that February reading on a month-on-month basis. We did see that slower revised GDP number of course, earlier in this week, but it's not really being seen as having any kind of expectation as to influencing the BOJ into coming off course when it comes to their tightening trajectory. And in fact, we have SMFG Markets, the head of Sumitomo Mitsui Financial Group, saying that the BOJ is seen to raise rates to a 30-year high this year, so to 1% this year, potentially to 2% if these broader economic trends of reflation of growth continue. They expect inflation in Japan to stay above 2%, particularly, Paul, as we continue to see these higher import costs and potentially some of the ongoing tariff concerns playing in there too.
Well, in terms of things getting expensive, Japan doesn't have enough rice for sale. No one can agree on exactly why that's happened. The higher cost of Japan's staple food has rippled through society. Bloomberg reporter Eddie Duan joins us now from Tokyo. So, Eddie, can you summarize what sort of price rises consumers have seen here and why rice inflation is so important?
Yeah, so first of all, the store price for rice in Japan has almost doubled since a year ago, and that does really have a big impact on consumer sentiment that BOJ rely on. So the BOJ, as you said, has a 2% inflation target, and although rice doesn't have a statistical impact, big impact on CPI, but it is, as you said, is the main food for Japanese daily life, and it has a big impact on consumer sentiment. And having the rise inflation besides the cheap yen and import has brought BOJ's projected CPI to be higher for this year and last year.
You know, reading through the story, it's quite confusing in terms of where that shortfall, what that's being driven by, right? Is it the cost of production? Was there simply not enough? Is there something going on in terms of the distribution system? And does there need to be sort of structural reform here?
Yeah, so that's an interesting puzzle we have. So the government says the harvest was ample. We had 180,000 tons more harvest last year, but government says we are missing 230,000 tons. They say this statistic is based on the major collection agents, which there are tens of thousands of agents in distribution system of rice market in Japan. The government said maybe they're holding up, they are stacking up to make profits, and they can't say exactly where the rice is. But what we know is that the price competition between those agents are intensified due to very strong demand, including tourism, that boosted the overall demand.
Haidi, to end there in Tokyo with that great rice mystery in Japan. Let's take a look at broader markets at the moment, and it is another down day, I should say, when it comes to trading here in Australia. And we are really on the cusp of potentially a milestone when it comes to trading in Aussie stocks. And this, of course, as we're sort of recently coming off record highs for this market. But the ASX 200 at the moment down just over 9% from the peak of February 14th. So a correction is nearing in the same way that we also see, of course, the potential correction seen this week for the S&P 500 in the US after it dipped into that territory in the previous session. Nikkei futures are looking also pretty muted, but S&P futures, after that last minute kind of turnaround, seeing a little bit more optimism. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens, and we see just that vulnerability when it comes to trading in US stocks, right? The S&P 500 falling briefly into correction territory. It managed to kind of come back at the close. We're seeing futures looking a little bit more robust at the moment, but certainly, you know, with the momentum and the elevation when it comes to the VIX, we could well see that correction before the end of the week.
Yeah, absolutely. And the upheaval over the trade picture just continues. I think we're 4 hours away now from 25% tariffs on steel and aluminium. Australia is hoping to negotiate an exemption. No dice so far, but in this environment, who knows? Anything could happen. Right?
Yeah, a matter of sort of hours or minutes, and you could see that reversal. And we are told that the request and the lobbying by Australia when it comes to that exemption was considered and had been thought about, but ultimately didn't come through. We are seeing that kind of pretty muted reaction when it comes to those specific steel and aluminium stocks in Australia, though, given it is quite a sort of minimal portion, if you will, when it comes to broader exports and certainly broader metals exports and businesses as well. Let's get you straight to the Tokyo Open. We're seeing the Nikkei 225 down by just about 0.25% there. We did get some of the PPI numbers through for February. They were largely in line with expectations. This as we did get that economic growth expectation revised lower ahead of the BOJ meeting, but largely still on track when it comes to that rate hike trajectory. And in fact, Sumitomo Mitsui really saying that they see that 30-year high when it comes to where the BOJ will end rates at potentially this year if economic growth continues to be strong. The topic seeing a little bit more upside, and dollar yen sitting at that sort of 148 level now. This, as we have been watching, sort of 145 as the one to watch, but potentially still a lot further to run when it comes to where we see yen bulls going from here at the moment. Let's take a look at Korean stocks, and this is the open when it comes to the Kospi. We're seeing upside of about 0.5% there, and some of the recovery that we could potentially see when it comes to the tech stocks and the chip stocks in particular. We also had a surprise drop when it comes to the jobless rate for Korea as well, but that reaction really being seen as elsewhere where we see the parts of the economy and also parts of the labour market remains quite fragile given the ongoing political uncertainty that continues to play out for Korea, Paul?
Well, let's take a look at how we are tracking here in Australia. Seeing a fair bit of selling on the local index at the moment, off by about 1.2%. Every sector once again in the red, and the ASX now down about 9% from its February 14 peak, so a correction nearing for Australian markets as well. We're seeing Australian bonds tracking lower as well following their US peers. Just in terms of a few stock-specific stories, BlueScope Steel now losing ground. It's off about 0.2%. As we mentioned, there's been no carve-out for Australia from the steel and aluminium tariffs yet. But BlueScope does declining, even though it does produce a tremendous amount of its steel inside the United States. All right, let's bring in Rajiv Batra now, Head of Asia and Co-Head of Global Emerging Markets Equity Strategy at JPMorgan. And Rajiv, I just want to talk about some of the analysis you've done on some of the Asian markets that we don't cover quite as closely. You see Vietnam and Singapore as among those most exposed to these trade policies coming out of the US, but at the same time, you're overweight these two markets. Can you explain that to us?
No, so definitely in case of Singapore, it's not a market which is purely an producer and exporter. It's a market which is more an entreport. So unless we don't see the entire global trade goes inside the recession, with some moment still happening, Singapore will keep on benefiting. Besides that, we also have the fiscal policy support from government, the recently concluded budget, where a lot of the higher or a generous cash handouts were given, tax rebates were done. That is overall being supportive for Singapore GDP growth and decline all the volatility happening in global growth. Singapore is not inching towards a slowdown or a recession. So hence, this is the reason why it remains as an overweight trade. Besides that, in Vietnam, even before the trade uncertainty hit or export slows down, we have seen one of the biggest stimulus or a policy announcement coming from fiscal side in Vietnam that supports construction and manufacturing sector, generates more jobs, especially in an environment if there are layoffs in the export side. These people could be absorbed on manufacturing as well as construction-led job, due to which government in Vietnam is now forecasting close to 8% GDP growth. So taking these factors into account, we are still keeping our overweight on Singapore as well as Vietnam.
Well, we've also got an environment where the US dollar is softening, rates becoming a little bit more benign as well. To what degree do you see that helping to support emerging markets in the Asia-Pacific, and how enduring do you think that might be?
No, definitely if the dollar is depreciating in an environment where the US growth is lackluster, emerging markets in Asia will tend to do well. We have seen in the past. And the sensitivity around is 1% dollar depreciation leads to around 3.5% increase in EM equities. Year-to-date terms, EM equities have been doing well relative to the DM, but it is not attuned to what kind of a depreciation we have seen on the DXY yet. The reason behind it, it tends to do well when the scenario is lackluster. But in case if the scenario start inching towards a recession risk, then even the EM equities can do relative outperformance, but absolute term, there is no decoupling from the US. So taking that into account, and what market is currently pricing, close to 25 to 30% probability of US recession, the absolute returns are looking a bit like a question mark from EM equities, at least for coming month or two. But in case if there is a confirmation that US is just slowing down and not heading for a recession, then lower dollar will definitely support EM and Asia equities.
I wanted to get your views on China. Obviously, a lot of this has been more driven by retail enthusiasm, right, in the revival for Chinese equities, both onshore and offshore. How sustainable do you expect this to be? And is a key component of that really that we need to see global funds and institutionals come back?
No, rightly you touch upon, China has been a surprise package for both sell-sider as well as buy-side. The fund managements also this year generating close to 20% local currency return or a 16% dollarized return, led by not just the DeepSeek announcement, but also the CapEx announcement coming from internet guys, and even growth surprising on the positive side. So taking that into account and the recently concluded NPC, which is in line with our house view of 5% GDP growth, 4% fiscal deficit target, inflation coming to 2% mark, and even if it is small, but still a consumption stimulus or a support at 0.3, 0.4% of a GDP is supporting China overall. So we have already seen EM and an Asia fund manager have reduced their underweight materially year-to-date terms. In fact, the EM fund manager, based on the January survey data, on a median have gone 20 basis point overweight on China. The investors who are still missing from China rally are global investors, but in case if international equities keep on doing well in the global avenues and my global fund managers are still not positioned in EM, in China or in Europe, the performance tend to hurt. So it's a matter of time. If international keep on outperforming US, you will see the tide will turn and they will not just chase Europe, they may also chase even Chinese equities too.
In terms of the China rally, Rajiv, it has been somewhat narrow, very tech-focused. Do you anticipate that becoming broader in 2025?
So if you will look at the return, 10% of the constituents are responsible for this 20% rally that has happened in Chinese equities year to date. And we have not seen other sector participating yet or materially outperforming beside tech to MSCI China benchmark. But considering we are seeing some stability in Chinese property market and government effort to revive the wealth effect in system, that will support consumption and start bringing in. So we are already calling for rally to broaden from second quarter onwards, and we are calling for consumer staples, property, healthcare. This kind of a sector should also participate. And remember, China still have dry powder left in case if the external pressure keeps on increasing overall, or you can say if US administration force other trading partner to start imposing tariff or block China, then China can come up with more packages besides CNY adjustment to bolster the economy, and that will help other sectors also to start performing in line with what Chinese equities have given return this year.
Rajiv, really great to have you with us. Rajiv Batra is the head of Asia and co-head of Global Emerging Markets Equity Strategy at JPMorgan. We are now hearing from the Australian Prime Minister, Anthony Albanese, just speaking here in Sydney, just giving that first sort of government reaction when it comes to the implementation of the steel and aluminium tariffs on Australian exports to the US. Albanese saying that the government won't impose reciprocal tariffs on the US, but expressing his disappointment and saying that the decision by the Trump administration is, quote, unjustified. We'd heard earlier that the government saying that it still remains in discussions and that attempts are still being made to sort of navigate these tariffs on steel and aluminium, but that clearly that has not been granted. We also understand in terms of a statement from the White House and the reaction there that it was really an across-the-board decision, not directed at Australia, but in the spirit of US steel first. So this coming despite a lobbying campaign that apparently does still continue by the Albanese government. These planned levies come into effect just in a few hours' time from midnight Eastern US time on Wednesday. There have been no exceptions for any US trading partners, according to the White House, Paul.
We have live pictures also of Bank of Japan Governor Kazuo Ueda. He's speaking to the Financial Affairs Committee, the lower house in Japan at the moment. Ueda says he wants the government to be mindful of long-term fiscal health. He is taking questions from lawmakers, by the way, in case you're wondering what's going on there. Ueda is also saying that it is natural for yields to move by reflecting the market rate view. And on that note, we are seeing Japanese yields climbing a little bit at the moment, the 10-year 1.544. But we'll be continuing to monitor Governor Ueda's remarks to the Financial Affairs Committee, and you can watch that on your Bloomberg terminal on Live Go. We have more ahead on the Age of Trade. This is Bloomberg.
But the biggest win is if they move into our country and produce jobs. That's a bigger win than the tariffs themselves. But the tariffs are going to be throwing off a lot of money to this country. And we've been ripped off for years by other countries, many, many decades. And they were doing the same thing. But I think we'll do it better. And I think we have a bigger advantage because we really are the piggy bank. They weren't.
That's President Trump speaking at a business roundtable in Washington. Well, the White House says 25% levies on steel and aluminium are going to go into effect on Wednesday in just a few hours' time, in fact. And that's as Trump backed off on a threat to impose 50% duties on Canadian metals. So Bloomberg News desk editor Jill Desis is with us now. So another last-minute reversal there, Jill. What are the chances that we're sitting here in 24 hours' time and the picture's different again? How do we see this evolving?
I mean, look, Paul, I think that at this point you have to look at just how a lot of this trade war has evolved over the last several weeks. And the answer there is that things are constantly evolving. Things are constantly changing. I mean, what we had happen here was ultimately, Canada has put in place these retaliatory tariffs. Not all of them they're putting immediately into effect. They actually have separate tranches that they'd want to roll out later. But Trump looked at that and said, no, he's the strong man here. He wants to increase tariffs. Obviously there was, some thought there that, eventually they'll back down. Canada does plan on eventually having some talks with Trump's Commerce Secretary, Howard Lutnick, to sort of walk through what they can do with their existing free trade agreement, which, remember, Trump negotiated during his first term in office with Canada and, their southern neighbor, Mexico. And here we are kind of in this situation where obviously we've got these tariffs going into effect. Still kind of remains to be seen. I mean, it will, point out that, these additional, the original tariffs on Canada and Mexico that went into effect just a little bit ago. There was some thought after the fact that, maybe they'll carve out some exemptions. So that's not, I would think off the table here. But yes, I mean, obviously quickly evolving situation. But the White House does say these steel and aluminum tariffs are going into effect at midnight Eastern.
No special carve-outs for, the sort of special relationship between Australia and the US, right? And I suppose that contention has to be questioned now too.
Yes, that's right. And I think particularly notable in light of the fact, that Australia and, the PM Albanese really kind of lobbied for some kind of a carve-out in this relationship. I mean, obviously, a lot of the ire from the Trump administration has been directed more on, Canada and Mexico and China, the largest trading partners that, the United States has. But yes, I mean, even Australia was not able to kind of get these exemptions. Again, kind of opens up this, continued issue where you've got all of these different trading partners with the United States that haven't been able, to sort of get any kind of, sort of a reprieve from these tariffs. I think Australia in particular, very interesting in light of the fact that Albanese is going to be headed for, a big federal election sometime, probably in May. So, I mean, some pretty big geopolitical implications to consider there as well.
Our Bloomberg News desk editor Jill Desis there with the latest when it comes to tariffs, and we are continuing to hear from the Australian Prime Minister Albanese speaking at the moment in Sydney, really expressing the sort of disappointment that that exemption was not granted, but saying that the government continues to work with the White House to try and make progress in this relationship. Well, turning to geopolitics, Ukraine has accepted a US proposal for a 30-day truce with Russia as part of a deal to lift the freeze on military aid and intelligence. US President Donald Trump says he hopes that Putin will also agree to the proposal.
Ukraine has agreed to it, and hopefully Russia will agree to it. We're going to meet with them later on today and tomorrow, and hopefully we'll be able to wipe out a deal. But I think the ceasefire is very important. If we can get Russia to do it, that'll be great.
For more, let's bring Bloomberg's Michael Heath. So the ball really now is in Russia's court.
Yeah, and I think that was very much behind Ukraine's decision to embrace it. Whatever the details are, that it couldn't afford to be seen as an impediment to any ceasefire, particularly after the blow-up in the White House that we saw, where President Zelensky sort of was asked to leave, basically. So yeah, I mean, it's going to be very interesting to see what Russia does. Now, before the actual invasion, when Russia and Ukraine were sort of skirmishing and Russia was backing various independence forces on the east of Ukraine, there were a couple of ceasefires. Russia went on to violate those ceasefires. So, I mean, Putin will sort of understand the momentum here that probably he does need to do something. Now, whether it holds is another question altogether, but it's interesting President Trump saying that, that Putin is interested in peace and doesn't want to continue with the war, these sorts of things. Because over in Israel, we saw a couple of days ago where the US envoy meet directly with Hamas, which is something that just hasn't happened for a long time. And Israel, which is obviously very, the Israeli administration, which is very close to the Trump administration, described that as a naive decision to go face-to-face with Hamas. And there's a real sense of that about how they're operating with Vladimir Putin. So, yeah, we'll just have to see what the Russians come up with.
Yeah, in terms of the ball being in Russia's court, what is it likely to come to the table asking for? Because I know there's some skepticism from some Western security officials about the way Russia's going to approach this.
Particularly in Europe, yes. I mean, look, the thing is that everything President Trump has done, talking about lifting sanctions, having this meeting without Europe or Ukraine involved, everything seems to be sort of coming around Russia's way. And so it's basically putting forward maximalist demands. I mean, that it will maintain all of its territory, that Ukraine will have to cannot have any prospect of joining NATO, must become a neutral state, curbs on the size of its military, and so basically, this sort of leaves Ukraine completely vulnerable. And the other thing is they don't want any NATO troops on the ground, which is what Britain and France had been talking about, and even Australia had been prepared to join with that as well. They want Chinese troops on there, which Ukraine is never going to agree to. So really it's just a question, it seems, almost of Moscow and Kiev trying to ensure that they're not the one caught out with, breaking the peace or disrupting President Trump's plans. But the ability to get a peace agreement here is going to be very, very difficult.
This is ongoing. Obviously, discussions in the Middle East are ongoing as well. And then, the sort of rearmament effort in Europe is picking up pace. And you've just got to wonder, we're sort of like a month and a half into the Trump administration and the entire global order is being reshaped.
Yeah, and that's the thing, Heidi. I mean, a few analysts have pointed this out, and I think it's really worth reiterating. It's very easy to tear things down. Creating this architecture, has sort of taken 80 years, and it's secured an amazing period of peace and prosperity in the world. And it really doesn't take much to pull it down. And for someone like Vladimir Putin, who's been trying to divide NATO and separate Europe and the US and that sort of thing, I mean, it's manna from heaven, really, in many respects. But as former Australian Prime Minister Malcolm Turnbull, when he was on Bloomberg, said, it's countries are going to have to start looking after themselves. The US has changed. This is not the same country that we've been used to for most of our lives, and everyone's going to have to become more self-reliant and reorder their security arrangements, probably.
Bloomberg's Michael Heath there with the latest when it comes to geopolitics. So this is what we're seeing when it comes to the setup in Europe ahead of the trading session. Futures at the moment actually looking like we've picked up some of the sort of resilience that we saw into the end of the US session as well, up about 1%, I should say, for Euro Stoxx 50 futures. German DAX futures also putting on about 0.3%, perhaps a little bit of a pause when it comes to the bearishness. We saw a fourth session of European stocks sliding in the previous session on the back of these tariff headlines as well, the increased tariffs on Canadian steel and aluminium, which of course was then sort of partially walked back. So we are perhaps just seeing a brief moment of respite there.
Okay, we've got live pictures as well of the Australian Prime Minister, Anthony Albanese. He is speaking about the imposition of US tariffs on Australian steel and aluminium exports. He is saying that Australia will not impose reciprocal tariffs on the US, but he says that tariff decision by US President Trump is unjustified, and the government will continue to engage with the US on tariffs. Last time this happened, Australia was able to negotiate a carve-out. This time looks a bit more challenging. We have more ahead on the Asia trade. This is Bloomberg.
President Trump is a business person. I'm a business person. At the end of the day, you need to provide certainty going forward in order for your economy to work effectively. And I think we need to get back to a place where people are certain about what's going to happen tomorrow and the day after and the day after that.
I think this war should, I hope it will end quickly. I think it's better not to have wars, to be honest. Maybe it's a tactic to negotiate. You have the cheapest gas, you have oil, we can explore, we can develop.
I think what we're going through is a huge shift in the global order around security. And I think, what is the response that probably Ontario is going to do to these tariffs? They're probably going to cut power. The governor's already threatened he's going to do it.
I think there is probably some short-term influence on the prices at all, but I think we need to let the system equilibrate a little bit.
Guests at CERAWeek reacting to the tariffs war between Canada and the US, and that war rages on. We've got 25% tariffs on steel and aluminium due to come into effect in just a few hours' time. Key steel-making ingredient iron ore picking up a little bit. That's not really helping Australian iron ore miners, though. We also have Brent crude rising. Haven't seen that for a while. The US is now projecting a smaller oversupply than previously, 500,000 barrels a day in 2026. That's down from the 1 million barrels a day predicted last month. And all of this uncertainty, gold is catching a bid. It's back above that $2,900 level. And it's interesting, Australia hasn't managed to achieve a carve-out from the US on steel or aluminium. Gold, however, well, Australia shipped a record amount of gold to the US in January over fears of potential tariffs, which is seeing this rush to safety. So the gold price there easing off a little, but it is back above that $2,900 level, Heidi.
Yeah, that's a safe haven play continues to be intact, right? Paul, take a look at Nissan, which is one stock that we're watching. Of course, in addition to the broader issues for the Japanese automakers with tariffs, etc., we're also seeing some idiosyncratic growth issues for Nissan. At the moment, though, we're seeing a pretty positive reaction with the appointment of Arvind Espinosa as the new CEO of Nissan Motor Co., replacing Makoto Ishida, who will step down at the end of March. He's currently the Chief Planning Officer, taking that top job from April 1st. But of course, a big challenge for Espinosa when he takes over, given the struggles that Nissan has had since that 2018 ouster of Carlos Ghosn. Gosh, that was a long time ago, and things sort of have not really improved very much since. He's really got to take on the task of reversing Nissan's fortune, finding a business partner after the talks with Honda, of course, fell apart, but also looking for potential other options for financial backing and the stabilisation of what is really, at the moment, a floundering business. So continuing to watch Nissan, but at the moment, a good day for that stock. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to trading in currencies at the moment. And we have had a bit of commentary from the Bank of Japan. It's really sort of moving that dollar-yen trade to that 148 level. Governor Ueda saying that it's natural for yield moves to reflect market views, with Bank of Japan watchers now seeing gradual rate hikes, but with a higher terminal rate being seen there as well. And we are watching kind of what has been sort of a bit of to and fro when it comes to the US dollar. Of course, a lot of moves in the overnight session, given that we had the intensification of tariffs on Canada, which were then sort of walked back to a certain extent. The dollar largely through the session holding the day's decline. We also saw a slump in the loonie there as well. And we're also sort of watching the Aussie dollar, given that no exemption was secured for those steel and aluminium tariffs on Australia. Let's get some perspective when it comes to the China economic rebound story and the growth outlook. Of course, we had the closing of the National People's Congress this week. Joining us now from Singapore is Erica Tay, who's the economist at Maybank Investment Banking Group. And Erica, really good to have you with us. And I suppose there's nothing that really comes out of the MPC that is wildly out of line with expectations, right? And it was largely a pretty muted session, certainly a short session that we had this year again. Was there anything significant to you in terms of the policy announcements, or does it kind of fit in with the narrative that Beijing has been trying to maintain until now?
Yes, indeed. So the stimulus figure that everyone was waiting for since late last year, that was announced. And I think the market was pretty much satisfied. It was within expectations, both in terms of the official fiscal deficit as well as the augmented deficit, which amount to around 9% of GDP by our estimates. And then two things stood out out for us. One was the focus on driving consumption. So obviously, exports are not going to be the engine of growth in the coming year. And it's good that China has actually outlined some pretty concrete steps to drive consumption. And then the other thing that stood out was this push to grow the tech sector. So it's not limited to just AI or DeepSeek, but really to push China's tech leadership in areas, as diverse as aeronautics and pharmaceuticals. So these are the three takeaways for me.
And we have seen the investor enthusiasm being driven by the revival in the private sector, these hopes of broader tech innovation, and a bit more free rein being given to tech leaders, right? But I do wonder, that doesn't solve the sort of fundamental structural issues when it comes to household confidence, when it comes to deflation, when it comes to what's still happening with the property sector.
Yes, indeed. So I think that, despite the strength of the tech sector and the run-up in the tech giant stock prices, the fact remains that patches of the economy are still very weak. So we're looking at about a quarter of industrial firms still suffering losses at the last quarter. So not a very good picture broadly. And I think the government has actually announced something by way of trying to curb deflation or the source of deflation. So as we know, demand for commodities has been very weak and dragging on prices. So at the NPC, the leadership has actually announced concrete steps to cut capacity in industries upstream that are suffering from excessive gluts. So things such as steel, we can expect to see China exporting less of its excess steel going forward.
In terms of exports, what's your outlook for China's export growth? And with the US imposing tariffs, do you see China starting to look more to other markets?
Yes, indeed. So in the past couple of months, we've seen what we call export front loading or panic stockpiling. So a huge surge of trade, both within the region and also from China to the US, as traders start to ship as much as possible, as quickly as possible before the tariffs set in. But I think for China, the stance now is quite different from the first trade war with the US. I think China is less interested in retaliating this time, and they seem to be more interested in propping up the domestic economy and also building trading relationships with the rest of the world. So policymakers came out to say that, look, the US might be imposing high tariffs on us, but we're the top trading partner with 150 nations, and we've got free trade agreements with 30 nations. So I think the message that they're trying to send is that if the US is exporting uncertainty in trade policies, and if the US is not interested in having allies, then we'll take them. Thank you very much.
All right. In terms of propping up domestic consumption that you mentioned there, what concrete steps do you anticipate in the coming weeks and months?
So I think the centerpiece has been a doubling of the consumer trade-in subsidies to 300 billion yuan. So this will go towards not just the usual white goods and cars, but also expanded to smartphones and laptops. So that's one. But that's just one-off because you can only renew your mobile phones that many times, right? So I think think two things stood out for me. One is the pledge to roll out free universal preschool education gradually throughout the country. I think this helps a lot in cutting households' out-of-pocket expenses, which for kindergarten amounts to about 7,000 yuan a year. And then the second thing that was quite meaningful was the pledge to allow the 200 million or so gig workers to take part in social security contributions wherever they are, and for the government to try and top up some of that contribution. So I think these steps are more sustainable and meaningful than the consumer trade-in subsidies.
There was a lot of encouraging sort of structural, demographic, longer-term initiatives in the work report that perhaps we haven't seen in previous work reports, right? Do you sort of worry about the lack of measurability and clarity in how they can be achieved, or do you think it's simply encouraging that these initiatives are clearly on the radar for leaders?
I think that they're moving in the right direction. I think some of the very difficult pieces of reform with regard to demographics have actually been rolled out despite a lot of difficulties and opposition last year. So the key one was the delaying of the retirement age. I think the chances that the market saw this happening were not high, and it was implemented. So I think I'm quite hopeful that the pace of reform with regard to demographics will continue.
All right, Erica Tay, economist at Maybank Investment Banking Group. Thanks so much for joining us. Well, after a stellar climb in Chinese equities this year, strategists believe a longer-lasting stock rally depends on a meaningful return of global funds. Bloomberg's Asia stocks reporter John Chang joins us now. So, John, what sort of enthusiasm are we seeing from global funds at the moment?
So definitely we've seen a very strong rally in Chinese stocks, 18% year to gain in the MSCI China index. But I think one big missing puzzle in the rally is the return of global long-only funds. So far we are seeing the foreign inflows being driven by mainly passive funds and a rotation within Asian and emerging market portfolios. But these global long-only funds, being buy and hold investors, they're a bit more cautious when they're trying to participate in the rally. I think one big key reason is there's a skeptical outlook of China's long-term economic growth and outlook, and that will take time to turn around. So I think a lot of them are still adopting a wait-and-see approach to see if things are fundamentally different this time around. But there is definitely a lot more optimism because of the DeepSeek-driven rally and also the retreat of the U.S. exceptionalism trade. So we'll just wait and see to see if they are having a bit more conviction in Chinese stocks in the coming few months.
There seems to be a couple of main concerns, right? One is the wrath of Trump 2.0 and what those policies directed at China could be, and the other seems to be, really meaningful, powerful economic support from the government. Do one of these really need to kind of be resolved, at least one, preferably two, I guess, for there to be more conviction from these institutional funds?
Yeah, I think out of these two driving factors, more importantly would probably be domestic economy in China. And of course, from the MPC, we are seeing a huge focus on boosting domestic consumption, and also we're seeing incremental improvement in terms of property sales data. So all of that is positives for these long-only investors. But of course, we need to see more evidence of that. And perhaps in the coming few months, we need to see Beijing unleashing more policy tools, or we need to see a more consistent improvement in terms of economic data. And that would really give these long-only funds more incentive to add back to China. But the investment case is definitely looking more compelling than ever because, like former outperformers like India, like Japan, and even the US, they are retreating. And the positioning there are very, very crowded at the moment. And even after the strong rally we've seen in Chinese stocks this year, global funds aggregate exposure to China remains at historical lows, and that means global funds will have a lot of potential room to add back to China. So we'll wait and see to see if that will materialize in the coming few months.
Bloomberg's Asia Stocks reporter John Chang there. Take a look at how broader Asian markets that are online at the moment are trading, and it is an interesting picture because we had that sort of late stage reversal of the S&P 500 just managing to close outside of that correction territory that it had hit earlier in the session. But of course the risks when it comes to US equities continuing to fall are not at all in the clear at the moment. We're seeing a divergent picture there where the Kospi is high by just about 1%. We had a difficult session in the previous session where it fell the most since the end of February on these US recession and tariff fears, but a recovery is being seen today. Not so much when it comes to Japan, with Tokyo looking pretty flat at the moment, and some extended losses here in Sydney with the ASX 200 on the cusp of correction territory from that peak on February 14th. So we're down sort of about 9% at this point after Trump ruled out an exemption for Australian steel and aluminium, with that tariff set to go through in just a few hours' time. But of course it is sort of broad-based tariffs, and we haven't seen an exemption for any of the governments that have really lobbied for one so far. And at the moment we are seeing US futures sort of rising in early trading too. More ahead on the Asia trade, this is Bloomberg.
The plane carrying former President Rodrigo Roa Duterte took off at 11:03 p.m. this evening and exited Philippine airspace. The plane is en route to The Hague in the Netherlands, allowing the former president to face charges of crimes against humanity in relation to his bloody war on drugs.
Philippine President Ferdinand Marcos Jr. speaking after his predecessor, Rodrigo Duterte, was arrested by police following a warrant issued by the International Criminal Court. Well, Bloomberg's Manila Bureau Chief Manolo Serapio joins us now. Manolo, how has this been received in the Philippines, and can you explain to us how this is part of the broader political backdrop?
Basically, this marked a new turning point in the ongoing feud between the Marcos and Duterte families. So what we saw was that in the span of about 12 hours, the former leader, Duterte, went from being arrested upon his return to Hong Kong, to Manila from Hong Kong yesterday, to being hauled over to The Hague last night, and to face charges at the International Criminal Court for crimes against humanity because of his drug war that killed over 6,000 people. This marks as I said, a new point, because this has been going on. This feud between the Marcos and Duterte has been going on for the past year, and it began with the vice president, who is Duterte's daughter, resigning from Marcos's cabinet, and then eventually she was impeached at the House of Representatives by Marcos' allies last month. And so right now we're not seeing any, except for the expected show of support by Duterte supporters, hundreds in Manila and thousands in his bailiwick region of Mindanao, protesting basically what happened yesterday. We haven't really seen any strong response yet from the public.
This is being seen as quite a calculated risk for the Marcoses, right? But there is a risk. What's a risk that this could backfire?
There is a risk that this could backfire because while Marcos, as one analyst was saying, was able to somehow sideline his biggest political opponents, it could backfire because the Duterte still hold clout, especially in the southern island of Mindanao, where they came from. And we see this, and we saw this with the show of support of thousands of supporters, not just in Davao City, where the former leader was started as a mayor, but also in other parts of that island. The thing that we are looking at is whether the Supreme Court will decide on a petition by the former leader to stop this enforcement of the ICC arrest warrant. And we'll see if that happens today or the next few days, and that could be the next twist in this story.
Duterte has, of course, historically questioned the ICC's jurisdiction after the withdrawal in 2019. So do we know procedurally what happens from here?
So basically what would happen is the former leader will have to face the charges at the Hague, the ICC. But the thing is, while the Philippines has withdrawn officially from the ICC in 2019, and Marcos, the president himself, has shunned any investigation arising from that against Duterte, his tone changed late last year, because as the feud deepened, he said, okay, now the Philippines can actually coordinate or cooperate with Interpol, because that's what it should be doing. And that's what the international community expects of it. So we'll see what kind of defense his lawyers would put up at The Hague.
Bloomberg's Manila Bureau Chief Manola Serapio there. More ahead on the Asia trade. This is Bloomberg.
Khosla Ventures co-founder Vinod Khosla says he's very optimistic about the role of AI in healthcare and energy. He discussed the uses of artificial intelligence with Bloomberg at the HumanX conference in Las Vegas.
I'm very excited about the role AI can play in healthcare. And in fact, I first wrote about it in 2012, about how the AI can do the role of doctors and therapists and teachers and other roles. So I'm very excited to see it all coming through, probably faster than I had anticipated.
You have been long time thinking about the implications for healthcare. You also said that energy is going to be a key beneficiary from generative AI. Look, we have a state of emergency in America around electricity and energy. What does this mean for AI, and how can AI help solve it?
I think it's a solvable problem. It's not an easy problem. But in fact, at the same time we invested in OpenAI in roughly 2018, when we made the decision to invest, we also invested in Commonwealth Fusion. And nobody around the planet believed fusion was near term. I think energy will be a solved problem by 2030, and AI will be a solved problem. There's Commonwealth Fusion, of course, which will, I suspect, go on to retrofit every coal and natural gas plant in the world with fusion boilers. So we don't have to build whole new power plants. That's one. But the sleeper is also super hot geothermal. Geothermal has mostly been ignored because it's 0.4% of US energy, largely irrelevant. But I think if the technologies that deliver right, it can also be 20-30% of US energy and global energy quite easily. So energy I'm optimistic about, but AI is very, very exciting, and AI in healthcare even more so.
But is there a limiting factor from an infrastructure perspective on the generative AI innovation we can see in the here and now? Andy Jassy telling us, look, my biggest concern is power in many ways. What is limiting the startups that you back?
Well, today, the big limitation isn't power. The big limitation is, can we get enough chips? And building a semiconductor fab is a 5-year process. So a new TSMC fab will take a long time. Once we have that, we'll have to power it, and we will need the power. You know, planning cycles in power are pretty long. So I do think we need to worry about it, but the world is doing a lot. But in 5 years, could you add gigawatts and gigawatts of geothermal energy? Yes. In the 2030s, can you convert most coal plants to clean power and produce many tens of gigawatts with fusion? I believe that's all possible and doable if we are smart about it. If we retrofit these plants, upgrade these plants, upgrade their capacity.
Khosla Ventures co-founder Vinod Khosla, they're speaking with Bloomberg's Caroline Hyde. Let's get you caught up when it comes to some of the corporate headlines we're following. And India's Bharti Airtel has announced a pact with SpaceX to bring Starlink satellite internet services to the country. The partnership will allow Airtel to offer Starlink equipment in its retail stores and allow SpaceX to leverage their ground network infrastructure. The deal is a coup for Airtel and intensifies the fight for market share with Mukesh Ambani's Reliance Jio. Uber has terminated its deal to acquire Delivery Hero's Food Panda business in Taiwan after the island's antitrust regulator rejected it in December. Uber is required to pay a termination fee estimated to be about $250 million and will not pursue an appeal. Uber says it remains committed to Taiwan and will continue to serve consumers, merchants and delivery partners. Take a look at how we're setting up for futures. The US futures rising in the early part of trade and looking mildly optimistic as we get markets coming online in Greater China.